hope everybody had a good year. For New Year, that is. At least there's no snow today. And I'll take
President's out of the country.
accept the draft minutes subject to any,
I'll move it.
okay. Hearing a second. Okay, then, sorry. Better? All right, the first agency we have today is the Grand Central Partnership. Would you be kind enough to introduce yourselves and... Oh, I always forget. The Audit Committee member roll call. Go ahead.
Private member.
Ready to get to work.
Details.
Right, so the private member is Mr. Bernard Rosen, Chair,
Present.
Mr. Mark Kaplan,
Check.
Mr. Bud Larson,
Here.
Mr. Michael Spitzer,
Here.
representing Mayor Bill de Blasio, Mr. John Rockwell,
Here.
representing Controller Scott Stringer, Ms. Jacqueline Thompson,
Here.
representing the Public Advocate Letitia James, Mr. Umair Khan.
Here.
We have a quorum.
Okay. Okay, we went through the minutes. Could you
Yes.
introduce yourself, sir, and the people with you?
Yes, of course. Good morning, Mr. Chairman. It's good to see you, members of the committee. It's nice to be back here again on this not so cold, but a little colder than we'd like it to be, January morning. I'm Fred Cerullo. I'm the president and CEO of the Grand Central Partnership. I'm joined today by two of our members of our team, Rob Adolnalfi, our CFO, and Rochelle Patrikoff, our Vice President for Operations. We're also joined by our independent auditor, William Scody, and hopefully any questions you may have with respect to the fiscal 17 independent financial audit can be addressed by any of us. Just for the record and as a reminder, the Grand Central Partnership is one of the world's largest business improvement districts here in New York City, covering a geography that ranges from 35th Street to the south to 54th Street to the north, 2nd Avenue to 5th Avenue with somewhat irregular boundaries, but that's pretty much the box of East Midtown that we represent. It comes to about 70 square blocks of some of the most important real estate in our city, if not the region. And we've had a very good year in fiscal 17, which we're very pleased. We have a very engaged board of directors and members of our committees that meet on a regular basis throughout the year. As you know, probably one of the most important things that was really a focal point of FY17 for us on the programming work side was the completion of the East Midtown rezoning, which began in the end of the Bloomberg administration and was carried through by Mayor de Blasio and Deputy Mayor Glenn and their teams with our elected officials, which really helped to define and provide a scope of what the future for Greater East Midtown will hold. And although the council adopted it just in the first 2 months of the first quarter of fiscal 18, so much of the work was done and so much of our attention in fiscal 17 was given to this very important land use initiative. We've also completed some really important programs that involved technology enhancements. I think some of them were in their infancy when we met and discussed them last. One was the completion of the Park Avenue Viaduct in partnership with the MTA, which was an LED lighting program. I hope at some point over the last several months you've gotten to see the viaduct lit with a variety of sort of exciting colors that represent different moments in our city, and they are becoming quite the Twitter and Instagram focal point for tourists and New Yorkers alike. We began also and will be actually implementing in this fiscal year, but the primary work, research, and approval was done in the last, an LED lighting program for all of the street lights that are in the Grand Central bid area. Just as a reminder, we, through the bonds that we are obviously still carrying, and from this report, not much longer, gratefully, we own all the street lights in the Grand Central neighborhood, and so we will begin actually within the next week or so the conversion of those street lights to LED. So there's and one other thing which I think is very important in terms of monitoring the assets that we've purchased over the years with the bond funds, but we began a second phase and implemented a second phase in an asset inventory app that we took from first developing a damaged asset report so that our field officers and supervisors were able to identify assets in our field that needed work, repair, cleaning up, and we turned that also into sort of an asset inventory app. So there are two parts to this now, which enable us to identify immediately where there are problems, whether that is a call from the public or it is determined and found to be an issue from our own staff, and we're able to monitor also how long it takes to repair them. So we're able to look at trends in the neighborhood. If some assets are getting damaged more than others, we also keep the cost to, and we can monitor the work that our vendors do in repairing them. And it's really important data that we know other bids are now looking at as well. So again, there's a whole host of things that we've done, but I just wanted to highlight some of them, particularly those that connect to the bond.
Okay. It's a nice area.
Yes, yes, we like it.
I like that line, tourist greeters.
Tourist greeters,
It's
yes.
all right, it's important. We
Yes,
need them.
it's a small team, but the impact that they have is pretty huge.
Sure.
And this in December of 18, so at the end of this year, which obviously will be fiscal 19, we will celebrate our 30th anniversary as a bid providing the services we provide. The tourist greeters were an important part of sort of the sense of welcoming people to the neighborhood, and we do monitor the number of interactions that they have with members of the public. They are called tourist greeters, but
That's a cute name.
for
That's
all
what it
intents and
is.
purposes, they're interacting with both tourists and New Yorkers who need information or who need to get somewhere or who are looking at the information we provide on the carts. We operate tourist carts that are mobile and they move throughout the neighborhood. And we also, through agreement with the state, are the staff of the I Love New York window in Grand Central Terminal.
Okay. Do you have any questions, Mark?
Yeah, I do. If we can look at the balance sheet, which is the minor one, why do you have two lines for temporary restricted permit when you have neither? You have nothing.
Right, so it's our firm policy just to make sure that each of the net asset classes are
You
stated.
could use your microphone.
Sure. So it's our firm policy to make sure that each of the net asset classes are stated even if they have zero balances. Only because sometimes, other
it's a
than
requirement.
city agency-related clients, they submit to foundations, and we just want to make sure that the foundations understand that nothing is temporarily restricted or permanently restricted.
Okay, then. There's a major difference between 16 and 17 on the prepaid expenses.
On the income statement?
On the income statement, combined statement of cash flows.
Oh,
It goes from a positive 110 to a negative 372. That's a big change.
That's accounts payable and
Accounts
accrued
payable, yeah.
expenses?
Yeah,
Okay, hold on.
it's on page 4.
Yeah, so that actually just had to do with the year of 2016 by itself. Typically, their normal level is about $400,000. I think, I don't remember, Rob, but there may have been some accrual for some capital projects that were done at the end of 2016, which were not the
Look
normal.
under the cash
The
flow
lighting
statement.
program,
All right.
the lighting
It's just-
program.
it's
Yeah.
a big number that sticks out. And then, just another minor thing. Yeah, I'll find it here. I'm not going to bother with the grammar, but why aren't the bank balances that exceed the $250,000 collateralized?
You're on page 9, Mark?
Yeah,
Right, so that would actually be a financial policy set by the Finance
no,
Committee.
I don't think it's your issue.
Yeah, I know.
Yes.
It's whether to open up multiple bank accounts so that you have more.
Either that or collateralize the one you have.
Right, but unfortunately, the banks do not make it that easy to do that. They used to offer supplemental insurance, but now they don't.
Well, a number of your other auditees do collateralize their bank balances.
Well, I certainly can bring that back. I'll bring that back to the board and the committee.
You don't have a lot, and it's not a lot of
Right.
exposure, but it's just the
Right.
way you have a policy. Everything I'm involved in the private sector, where you have a bank balance of any size, it gets collateralized because the boards like to see that protection.
Okay,
We do have protection in that we have CDs with FDIC, and we have these insured savings accounts, which
No, I understand
work
that, but there
similar,
is-
and they're all guaranteed, protected. They're all FDIC.
There's a specific
insured.
statement here, you exceed the limits, and you're not collateralized.
Okay.
Now, the other one I have, I think I've said it every year, the reference to a first-class restaurant.
Yes.
I've eaten in that restaurant. If that's first class, what do we call the Bernardin? Galactic first class?
Yeah, super first class.
That's not a, I mean, if that's,
We're like the airlines, Mr. Kaplan. You know, we keep changing, we keep coming up with new ways to call the same seat. But I have to tell you, this has been, we're very proud of the restaurant, although we do not manage or operate the
Yeah, they
restaurant.
don't operate.
The only thing you can see me doing in the restaurant is eating. But we're very proud of it, and the restaurant is very much a symbol, as well as being an incredible amenity for the neighborhood, because when you think, for those of us who remember under the viaduct in the 80s, it was really a representation of what was happening in the neighborhood, and while that space was, for all intents and purposes, not used except for a while. DOT used it as storage. The Convention and Visitors Bureau back in the 80s used it. It was a sort of a little shop and store, but it was a graffiti-ridden space.
I'm not quarreling with the.
Yeah, no, I know.
They did a good
This is
job.
a statement, if you were writing a prospectus, you'd have to qualify.
Yeah. Well, we'll footnote it next time.
I don't know. Just-
We'll go to Yelp. We'll print out some good reviews, and we'll get it for you. But I think I will say this: I have no doubt that Buzzy O'Keefe, who does own and operate the restaurant, believes this is first class as well. So
No.
yes,
The viaduct is where you go around, you go up?
correct. The Park Avenue, as you know, at 40th
Yeah.
Street, then goes up and around the MetLife building and Grand Central. It's at the 42nd Street level, at the ground level, underneath the viaduct. There's the terminal is on the north side,
okay.
and the Pershing Square Cafe is on the south side.
That new building is going to have some impact on your area, isn't it?
Yes, it's very exciting. One Vanderbilt, which was the result of the first part of the rezoning, which was just the Vanderbilt corridor, is really an exciting thing, which really just blends the new and the historic. They've designed it in such a way that will be very useful to the millions of people who come in and out of the neighborhood. It will have a transit hall on the ground level. There will be a plaza at 42nd, between 42nd and 43rd on Vanderbilt will be closed to vehicular traffic, and will be an ability for people to come in and out. But I don't know if any of you noticed, because even people who are there every day and work in the neighborhood, you almost missed the fact that there were 4 buildings on that corner that came down. They came down so slowly and quietly, and thankfully without incident, that one day you looked up and there was this incredible space that you could see from, Park Avenue across Madison Avenue. You could see the terminal when you looked east. A lot of the structure is up now. You can kind of get a sense of it, but
It's
but
massive.
It's massive.
I pass it
It's
all
a
the
whole
time.
block. It's the whole block, and it's a really beautiful design. So we think it'll be a great addition to the neighborhood, clearly.
When you realize that there were people, or there was talk of taking down Grand Central Terminal,
Yes,
which
I
would have
know.
been a tragedy.
Absolutely.
And I remember when I had retired from the city, the chap who had been the budget director was over at the MTA. He says, "Come, you'll work a couple of days a week. You'll keep yourself busy." That all the work they did at that terminal, sky sealing, the retail
Yes.
shops, there was a lot of remediation that had to be done.
Yes.
It was red lead, but they did it.
They did it, and they really have kept it up. I mean,
Yeah.
they're, not, I guess, different people, different businesses who are in there who are experiencing some change. Not everyone loves that because you get used to a certain type of store in a place, and then all of a sudden it's gone and a new one. But we really do credit them for the attention they're giving it. Grand Central is looked upon. We get visitors from all over the world that want to understand Grand Central better, and it is used as a shining example of what transit hubs can be. They're not merely places to come and go, which I think we all grew up experiencing. Today, they're destinations, and people come to Grand Central to shop, to go to the Green Market, to, have drinks. It's a specific
You
place.
left out the oyster bar.
Well, the Oyster Bar.
That's a
That's a
landmark.
first-class restaurant.
Maybe minus a little, but it's pretty good.
All
But
our
like somebody
restaurants are
said-
first class.
I'm having lunch there tomorrow.
Yes, I'm good. Enjoy.
It's amazing that the work went on while so many people were using the terminal.
Yes.
That was astounding.
Yes, it never closed, and
And then someone else said they have that, like, pedestrian walkway going almost, I guess, from the terminal to the 49th Street, or?
yes, North End access.
And that was a miracle. I
Yes.
mean, to build that, so
And
while people,
Yes, it's that's been a great. I mean, we all use that because, especially in weather like this, you could stay inside as
Yeah, you
to
can-
48th Street. But I think the one thing that we are very anxious for as well, in a very positive way,
Is it-
is East Side access.
Yeah,
which,
that's been a long
it's
way.
taking a little longer than we had hoped.
a lot longer.
Maybe not surprising given the sort of enormous challenge to get to Grand Central, but that will also change people's commutes, the ability for us, and it's actually in part going to change how we think about what we do, because we will be serving so many more people and different people who might
Sure.
not have, so it's really very exciting, and it's really important for the region and
I think
people
so.
doing business
And
here.
suppose, I remember someone hearing at a meeting that Penn Station was too crowded
Yeah.
for the LIRR, for New Jersey Transit, for Amtrak. You had to relieve it a little bit.
Yes.
So it's a good thing.
And this is not an area where we're all in competition, but it's really exciting to think about
Sure,
what
sure.
new Penn Station can be,
Yeah.
and what that will also mean for the city. We all exist as business improvement districts, yes, to pay attention to our neighborhood and to serve our
Sure.
neighborhood, but the reality is we all exist to create a better city.
Absolutely.
And collectively, we meet and we discuss those priorities as bids. There are 74 of us now throughout all 5 boroughs, so different sizes, of course, and budgets, but we're all doing really the basic core things that we share, best practices, and so we'll
Very good.
here's to a new year.
You raised one point I was going to ask, but I didn't know where to ask it. What's the aggregate of the dollars,
Assessment dollars?
both the assessment dollars, and if you added up all the balance sheets, what would the net assets look like?
Oh, I couldn't tell you on the net assets, but I believe the assessments are about 120.
Yeah, the total revenues is 100. I'm sorry, I'm Stephen Lee from the New York City Department of Small Business Services. I oversee the bid program for the city. It's 134 million in FY16, and this year we're just crunching numbers right now for FY17. It's gonna be about 141 million. That's across 70. It's actually 75 bids. Morris Park does 75th
okay.
bid.
I'm a bid behind.
No, that's the
I'm
cost of
bid
it,
behind.
What?
the bids.
just passed into law last month. What's that? I'm sorry, sir.
I was just answering Bernie's question. The number you gave us is the annual,
Yeah, that is, that number, 134 million, is assessment revenue plus additional revenues raised
Yeah.
externally.
gross income.
Yeah. So and when you think about that number, it's an incredible amount of private dollars going back
Sure.
into the neighborhoods of our city.
But how much will your assessments go up based on this new building?
Well, that's interesting. Well, right now, without any action by us, our assessments will go down. The amount of money we collect will remain the same, but everyone's assessments will drop. unless we get in front of the opening of One Vanderbilt or any new construction in the neighborhood. The way the bid funding exists is that when our budgets are approved by the city, by our boards and the city council, it's actually fixing the amount of revenue we collect. There's a rate associated with it because we back into the square, I should say too, there are different formulas for different bids, or a combination of them. For us, it's cents per square foot. So it's very simple. We pick a number that we think we need. Now, of course, we've only had 3 assessment increases in 19 years. Our last was in fiscal 2012, and have no intention in this new year, at least absent an emergency, seeking another one. So every year, we are keeping the same amount of revenue, and the rate ends up fluctuating based on accessible square footage or non. Some property comes online, some property becomes tax exempt, and so that number. So One Vanderbilt at, 1,401 feet tall of, let's say, all accessible property, we won't see one more dollar in our budget unless we go and try to figure out in advance, which, believe me, we will do, what what the rate should be, or what it would be if we kept the rate at what people are paying today, and then adding that number. But it's a legislative process. But by nature, it's not as if we're fixing the rate so all the square footage plays off the rate. It's really we're fixing the revenue amount, and then we're backing into the rate and the square footage. So unless we adjust the revenue, there is no increase. It just, for the additional square footage, forces everyone's rate down. But, and we have a relatively healthy neighborhood in real estate, the other side of it is, if half of our property became tax exempt, and they're making this up as an example, and therefore assessment exempt, we would still get the same revenue. Those left would be paying, let's say, twice as much.
Sure.
So that's what gets fixed.
Essentially, it's one pie of money, and it just gets split between the different properties. So if new properties join, everybody else pays less. If properties go away, then everybody
They're all
pays more.
happy.
Correct. The process, I have to say, and it's worked, look, we're going to be 30 years old. It works.
Okay.
And when we managing the finances, not having to go every year, certainly, like I said, we've gone 3 times in 19 years. So we're able to manage this. But the reality is, it's not that it's cumbersome, but it's a somewhat lengthy, and it's a lot of work to get an assessment increase. So if there is just even one new big building, we have to go through many, many steps, working with our agency, who gives us a great deal of support, but it's also our elected officials. It goes through the city council, our boards. So it's not as if we just, a new building, let's just change the number. It could take a whole fiscal year to do it. So it pays for us to be paying attention, keeping an eye. I think in our neighborhood, with the rezoning now in place and the future still sort of unknown of what kind of development will actually, take place in Greater East Smithtown, we really need to be ahead of this so that we are capturing the new square footage and being able to do all good new things with it, with the money that's generated.
Right. Are there any more questions of the? Thank you again. It's nice to see you.
Thank you very much.
Thank
It was
you
good to see you
luck.
all.
I'm not going to bother with the ground.
All the best, Mr. Scott.
You too.
I walked by there, I don't know if you've seen it, next to steel in it. It's so massive.
Oh, we're going to do the Department of Education. Okay.
It'll be one of the biggest.
The agenda's a little different than the draft. We're going to do the Department of Education Management Report next.
I know.
Thank you, Mr. We have our team
Yes, yes.
that worked on the Department of Education as well as DOE members that are finding their way. So the agenda covers our management letter comments that we would be happy to shed additional light upon. I did want to point out that there is a separate letter addressing those comments. Those comments largely are control deficiencies and not something of a greater magnitude, which I think is good. We have Hassan Khan. Many of the comments actually are IT-related. It's part of our controls work, IT controls work relative to the financial statements. Please understand that that is a very limited type of review, and it's very specific to financial reporting. Hassan Khan is available should you have any questions. I don't know, Hassan, maybe you'd want to do a quick summary of each one and then open it up for questions from there. And we also did have a financial reporting comment toward the very end of the letter that Brian will address with you at that point.
Great, thank you, and good morning, everyone. Specific to the Department of Education, as Cosmo mentioned, our scope was fairly limited, and I'll just go over that really quickly before I get into the 4 items that are listed in the letter in front of you. There were 2 applications that we considered in scope. Famous, which is the general ledger that's used at the department, and Galaxy, that's a budgeting application. And then we look at the overall holistic technology infrastructure that helps keep both these applications up and running. We look at security administration controls, change management, and operations, which includes backups, monitoring, security event logging, and the like. So I'll go over the 4 control deficiencies that are noted, and of course, please interject with any questions that you may have so I can provide more color and clarity. The first comment is specific to policies and procedures only. And basically what this states is, even though there are good working procedures in place, the department has protocols on how to provision a new user and deprovision a user to the applications and the technology infrastructure, we just need a formalized document that states what those procedures are, so that if a new employee, a new personnel was to join the department, they could pick up that policy document and know exactly what needs to be done in order to maintain security at the department. Management has a good path forward, and they will consider actually putting this policy document in place, reviewing it, and approving on an ongoing basis. Second part of the first item is a disaster recovery plan. Basically what this indicates that specific to the department, we don't have a formalized and approved disaster recovery plan that would indicate what the department would have to do in the event of unforeseen circumstances, that if we were unable to operate systemically, what would the department do? So there is a short-term plan in place, which is great, and the department is looking forward to putting a formalized plan in place by 2020. And they will indicate exactly where they would operate out of and list all those protocols. Item number 2 is, there's a few bullet points in item number 2, and this is all specific. Yes,
You were
please.
talking about the secured space in Piscataway.
Yes.
How close is that? Is there public transportation to go there?
Yes. Piscataway is, if I'm not mistaken, and Desmond, maybe you can shed some insight, about 20 miles outside of New York City, ample
And
trains
how is the
buses.
space? It's,
So, I could answer that.
could you speak up, sir?
The Piscataway space is currently used by Do It as a full-blown data center.
So you're
for
using it now already?
the city's Department of,
I guess what I'm getting at, it's important to test it.
yes.
To go there
it's-
periodically and so on and so forth.
So that site has been operational for about 3 or 4 years, to my knowledge, and it is
Okay.
tested annually, so it's a very secure space.
Why then is it going to take until 20?
I'm sorry?
I'm sorry, I just want to follow up. The comment says that you won't have a DOE-wide plan until 2020.
So there are 2 separate plans. One, the immediate, was to cover disaster recovery for the financial systems, HR systems and our operational systems. The second part, which is much larger, is providing backup and redundancy for internet controls, network, data services for users. That larger plan, both of those plans are taken in consideration, but we felt that the financial plan needed to move forward first. Both of the plans are being reviewed with OMB, so it's just a matter of timing, approval of funding, et cetera. But that's a large-scale plan, so it will take some time to get that whole thing in place.
The only comment I have is that periodically, one of these organizations has a problem, and people say, why didn't you address it earlier when the thing happens? And something that's 2 years away in what could be a critical circumstance seems to me a long time. And if anything goes wrong, you'll be explaining to people why you didn't do it sooner.
So we do have redundancy in terms of operability for the network. It's just not fully redundant for all of our application set. So I know that we do have contingencies in place if a link goes down or if the internet goes down in one site. So we do have some contingencies. We just don't have a full-blown, fully operational, redundant set for our applications, data, et cetera, that would, make us 100% resilient. So we do take steps to provide some redundancy and recoverability. It's just not a complete plan for every application in the DOE.
I understand. To balance it.
I mean, we would love to have it quicker. It's just that given the size, the scope, and the magnitude of what we're doing, it just takes a long time to plan out, get the approvals, get the contracts, and everything that needs to be in place to have that plan in place. We are moving as expediently as we can.
Go ahead, sir.
Very good. And thank you, Desmond. Item number 2 is specific to individuals that had access to the mainframe, and now we are speaking just solely for the mainframe. So a few bullet points, I'll go over them briefly. The first bullet point basically indicates that there were 240 personnel that had administrative privileges to the mainframe. The important point to note here is that these 240 personnel are supporting close to 150,000 individuals. So from a percentage standpoint, that makes sense. Management has a good path forward that they will review who these individuals are and see if we can somehow whittle down the number of security admins moving forward. The second bullet point indicates there was 77 accounts on the mainframe that we were just having difficulty identifying who these individuals are, if any, or are these all just system accounts. So we have listed out exactly what the path forward is. In certain instances, we have to reach back out to do it. In certain instances, we are revoking access, and we're still identifying, if at all possible, to identify who these individuals may be. The third bullet point speaks of 2 accounts that belong to personnel that are no longer at the department. Management will revoke these accounts and identify a process moving forward that the termination of any personnel that we have an expeditious process in place that we would revoke access within a certain time frame and not let it go days unnoticed. The fourth bullet point, 2 mainframe admin accounts belong to employees who are no longer within the IT department. We have provided an explanation as to one was an auditor and one account was revoked. So at the time that we came in, it was already taken care of. But as of fiscal 17, that was a concern. And an overall holistic response that management provided was that as a general practice, that they will continue to review activity for these privileged accounts, which is great. The third item, now this is more specific to terminated personnel. We took a sample of 25 individuals that are no longer at the department. Unable to identify the 25, for all 25, the network access and the forms that indicated when these individuals their access had to be revoked. And then the second bullet point, that there was 6 personnel that still retained access. 2 of the 6 have now been deprovisioned, and for the remaining 4, as of the time of this letter, which is back in November, we were going to revoke access. So all of these concerns should now have been mitigated. The third bullet point, there were 10 terminated personnel that were selected specific to famous. Management understood that these all have to be removed, and they have since been removed. The overall response for these items is that we will implement a tool or an automated process in place that will identify when people leave the department and then quickly revoke access on an ongoing basis. As that application is being implemented, there is a good manual process in place on an ongoing basis that we were taking into account for all these individuals. And the last IT-related comment is more specific to user access reviews. Basically what this indicates is management should, on an ongoing basis, and this could be semi-annual or depending on the frequency of transition within the department, even an annual control, that on the Active Directory, Famous, and Galaxy, that the appropriate stakeholders are looking at who has access to what within the application and signing off to make sure that only the right people have the right access, which is commensurate with the job responsibilities. On the Active Directory front, we are up and running. And for Galaxy and Famous, we are now speaking with the appropriate stakeholders so that they understand what their responsibility is and then be able to sign off moving forward. Any questions on these 4 items?
Not on these 4, but a macro IT question. This is the appropriate place to bring you
Sure.
in. You refer to Famous and Galaxy, which are independent financial systems that the Department of Education maintains, which is historical, since it used to be a separate entity and not a city department. I believe there's a process for that information to be transitioned or reported, included into the overall city financial.
FMS.
The FMS. Have you looked at that process that posts that data into FMS, and are you comfortable that it's done on a timely basis and accurately and such that if I was to go into FMS, that I would be seeing the same information and same data that's in Famous and Galaxy?
That's a great question. So, but what you're referring to are the interface controls between these 2 applications, and yes, we do review them, and there were no concerns from a systemic standpoint. Brian, if you have any thoughts on, I guess, the substantive procedures, that would be.
As part, yes, as part of the audit, we do look at the information that's transferred over to the city's books, and then also what is being reported on the citywide as opposed to what is being reported on the DOE's individual statements. So that is part of the testing that we do. That's part of what we do look at.
And both on an ongoing basis as well as a final result? In other words, if I'm in the middle of the year and I look in FMS, am I going to see the same answers I'm going to see if I go to Galaxy?
Our primary focus is on
Just at the year-end,
Yeah,
right.
now, again, as Hassan said, we do, as part of the IT, we do look at the controls and the processes to see if there's any holes in that process, and didn't have any concerns on that. But our focus on the audit is not on the interim, it's on the final.
Do you have any idea on the timeliness of the posting of that data?
We did not have any
Okay.
issues with that.
Great.
Mr. Chairman, I have a question. I just want to thank Grant Thornton for doing this audit and looking into these issues. I mean, it's critical. You mentioned that there were 25, that you sampled 25 terminated users. Have we looked beyond, has DOE looked beyond that? Because that's a sample, and that gave you an idea as to what shortcomings were within that sample. But have we looked beyond that to say, okay, well, this kind of gives an idea as to what issues there might be, and looking beyond that to ascertain if there were other problems, and have those been remedied?
So I'll take a stab, Desmond. And so the fact that we came up with 6 personnel, Omer, out of the 25, from a pure methodology standpoint, that fell within the construct that it was acceptable. So if we were, even though it's a sample-based population, it gave us enough comfort that this is an occurrence that sure these items were in play. It did not rise to anything more than a control deficiency because of the number of concerns that we noted. So from an audit standpoint, I think we were comfortable noting that, yes, absolute concerns, we should have a process in place moving forward. but it didn't rise to a magnitude any higher than that. And to your question, Desmond, if you had any specificity.
So the DOE has put significant manual practices in place. A couple of years in a row, we've been talking about the identity management system. That system, the automated system, should go into production by FY19. So we're coming close to that. We did implement manual processes on a monthly basis to clean up accounts of people who have left. And we have an annual reconciliation process. It's all manual now, but that improved our, ability to get rid of accounts of people who have left over the past year. So I think we're getting close now to the point where within 30 days, we're removing those accounts and the necessary access. One of the challenges that we struggle with from an automation standpoint is a lot of the staff that leave the Department of Education end up coming back. So even though you get flagged as a termination, you may come back as a consultant or a provider to provide services. So even though HR would say this person is terminated, they need an access to provide services. So there's a lot of different permutations like that. So that explains some of the anomalies. When you look at a staffing report and you say, okay, there's 25 people that are removed, 6 of those people could be working F status, they could be working as a consultant, et cetera, and they may need access to email. And that's why you wouldn't see some of those things. So there's a lot of different permutations that work.
I appreciate that, and it's certainly a very complex and large organization that you guys run. Prospectively, I guess my question is, and that was the point made by the auditors, I think it's critical that we ensure that, people, that we don't give too much access to individuals who may not need it. So what processes are you going through right now to make sure that the right people have the right amount of access for the right duration?
So the design of the identity management system does a couple of things. It automates the provisioning and deprovisioning of accounts based on HR events, but it also provides an annual attestation process that basically lets us review every year and say, okay, does this person still need access at the level that they need, regardless of whether they're a new employee or they change status? That recertification process is something that the new identity management system will allow, and that never existed in the department before.
So what are you doing right now? Because that's not going to happen for like another year and a half or so, I'm guessing, or maybe 2 years.
So right now, what we're doing, as a person changes location, we're removing access and having them register for access again, because that's the approval process. So if you go from a central office into a school, we would remove your access based on that event, and then you would have to apply with your principal to get a new level of access. So that's what we're trying to automate. Right now, it is a manual process, but it just, every 30 days, we'll just say, okay, these people have transferred location, take away access. And that's the best we can do from a manual perspective until the automation is in place.
Great, thank you.
No problem.
Thank you. And for the last item, I'll turn it over to Brian. Thank you.
Great, thank you, Hassan. We did have one financial statement comment, which is number 5 in the letter. And this is a very specific issue that resulted from the review and during the review and preparation of the financial statements. There was an error identified in the calculation of pension expense only on the government-wide financial statement. So it's very limited. We've worked with DOE to get the numbers corrected for 2016. Reclass the information there. This had no effect. I mean, it's interesting that for the DOE, there is no change in net assets on the government-wide statements because they're a department of the city. So this, even though we identified this error, it had no effect on that change. It was purely on the statement of activities. A reclass between the expenses were reduced, and then the amount of funding to be provided by the city was also reduced by a corresponding amount.
How much was that over?
Yeah, how much?
It was about $5 billion.
5 billion?
$5 billion?
It was a substantial number, but
Wow.
because it was on again, it was only limited to the one financial statement. The liabilities that were recorded on the statement of net position were correct. The change in net assets obviously did not change. It was just a.
It didn't change the government-wide statements. It was only on the statement of net position, right?
It was on the government-wide statement of activities,
But not the,
not the fund level statements.
Okay.
Yes.
thank you for the.
Yeah. And really, the fund level statements are what are used to operate and
Well,
and
yeah,
manage
that's what
the-
gets incorporated. yeah.
Right, right. The government-wide statements include all of the assets and liabilities of the department, and that's where the total pension expense is shown up. So the amount of expense that was recorded on the fund level statement did not change also. It was purely on the one statement.
That's such a big number.
It is a big number, yes, sir. And it was just on the calculation of the change in the, it was basically, the error was on how the change in the liability was flowing through the statement of activities.
So the liability stayed the same.
Liability stayed the same.
Yeah.
But it's
Okay.
Just how that flowed through the statement of activities. That was the only error. That was the only change that was made.
So is there a difference in interpretation or understanding, or was that a mistake? Like
It
what?
was a math error. Math error.
Math error.
Yes, sir.
staggering error.
Yeah.
Well, that's what you're there for.
No, we didn't catch it.
It's more like the things we used to get on management letters before. Now there's so much data processing on them that you rarely see one of these things, but it's good to see it, that it gets caught.
And so for DOE, have you looked at this and were there any, what led to that error?
In 2016, a lot of the pension numbers changed, so with those calculations and the constant changing of the formulas, unfortunately, there was a human error there. So we're glad that Grant Thornton was able to recognize that, and we were able to correct it in this year.
This only affected 2016, 2017 was okay?
Correct.
It's hard for me to follow this thing, and no implications for cash.
Correct.
No.
Because the pension liability comes off the actuarial report.
Yeah.
That's prepared by the city actuary. And so that number is the assumed or projected liability for the pension plans out into the future. This is the amount that in the future, based off of today, is what is going to be owed on those plans. And those expenses, that shows up on your statement of statement of position as a liability. And then how those changes run through that statement of activities was where the issue came about. But it has no impact on cash. It really only had an impact on,
To the entity-wide.
for the department, the amount that the city would be future pledging
Right.
to cover those future expenses.
Correct me if I'm wrong, everything that gets booked as an expense winds up to be a receivable due from the city and a
Correct.
corresponding revenue.
Yes.
That's why there's no cash impact.
Yes, sir.
I
That's
assume
exactly
as much.
correct.
Must have been a little shockwave when this discovered.
Come on, this is smaller than OPEB.
By like 80 billion.
It's smaller than
As it was for us too, sir.
It's the biggest number I've heard in all the years I've been involved.
In the old-fashioned statements, you never would have seen it, right, Mike?
Yeah.
You'd never see it. When they went to the new entity-wide statements, you
Would have been
began
a
to see
disclosure
it.
somewhere, maybe you would have seen it, maybe not.
Literally, it was probably on page 179, right? Unfunded actuarial accrued liability, but now it's on
And
the
it
face of
doesn't
the
affect
financial.
the
If anybody
controller's
read the
annual
book and
report.
got that
It does
far
not.
back, they fell
So
asleep.
what the hell?
And so the city's actuary
an
was,
academic
this information was
mistake, as far
transmitted
as I'm
to
concerned.
Ms. Chan's office? Was this shared with the actuary's office?
It actually does not affect the actuarial calculations stay the same. It's just how they're presented within the financial statements themselves.
Although they stayed the same, our office did relay this to Ms. Chan's office, just for their
So
information.
that they would know.
We did.
Yeah.
If there are no more questions of the Board of Ed on their, Department of Ed on their management report, I thank you all. We have school support services from the New York City School Support Services. Mr. Wall, do you handle that, or?
Unfortunately, no.
Yeah, you do. I
I'm
figured.
here for support. They have their own CFO, CEO,
All right.
their own auditors. Mark David from School Facilities will be sitting in, and my group will be on the side.
I have some questions about it. I don't know. I never in my life seen anything like it.
I had lunch yesterday with our former controller,
What?
Phil Thompson, and I had lunch yesterday. Our former controller of the city of New York and I had lunch yesterday.
Did what?
I had lunch with the former controller.
Oh, Thompson?
Yeah.
He's head of the,
SUNY, as the city
of
university.
the, yeah, the pirate. Okay, good morning, everybody. Could you introduce yourselves? And Mr. Wall, you're sitting over there, you're not in, you're kind of
He's worried there'd be a $10 billion number. What are we on, school support center?
Good morning, I'm Stephen Brennan.
Let's, just to get a little background, these statements reflect the salary costs of the custodial assistants.
I'm with you.
What used to reflect it before? I'm not getting an answer.
It would have been held within the custodial payroll by the CEs.
Speak up, sir.
It would have been held by the custodial engineers, the CEs that ran the building. It would have been within that budget there.
So basically, if I understand you correctly, you're saying their costs would have been reflected on what we paid the custodian for managing the school's property. He hired the assistants, he paid him.
It was an indirect system where the custodian engineer was acting as a subcontractor.
And I guess he reported financially, periodically, what he was paying and so on and so forth?
Yes.
You want me to? Yeah, I'll introduce myself. I'm John Schaaf, CEO of School Facilities for the Department of Education.
Good.
So just to give you a little bit more background, if you recall, for the past 150 years prior to August 11th, 2016, we had in the DOE what we called the indirect system, where custodian engineers were DOE employees, but they were managers of their own budgets and their own hiring and firing.
So you call them custodian engineers?
Custodian engineer is the title. It's actually a DCAS title. Again, they're DOE employees, still are under the new system, but instead of now 1,350 individual employers, we have moved the Local 94 fire persons and stationary engineers and the 32BJ cleaners and handy persons, all employed now by school support services.
So you're paying the custodians under this?
No, sir. The custodians are still paid by the DOE as our employees, and then school support services is a contractor to the DOE, and we pay them monthly to fund the wages and benefits for the helpers.
So again, prior to this, the custodial engineer got a lump sum, for want of a better term?
So there was a custodial payroll system that resided in the DOE that managed all this, but yes, effectively, custodian engineers got checks in their name every 2 weeks for each one of their buildings to manage their building individually.
Which included these custodial helpers?
That is correct.
And a few other odds and ends.
Some supplies and others, but it was primarily and still is a labor budget.
Still,
what was that, sir? I missed.
It primarily still is a labor budget. The vast majority of these costs are the wages of the helpers.
Years ago, when I was the chairman of the audit committee of the Board of Ed, there used to be issues where the custodians had Jeeps and things like that, which after a few years they inherited. Has that been remedied or addressed with this new system?
Yes, sir. If they have Jeeps, they bought them out of their personal funds, not out of the DOE funds. Yeah, it's actually before we moved to this new system, there were many more controls that were put in place that took care of a lot of those abusive. But this system has allowed us the transparency and the data now in a central place to be able to manage all of that much more tightly than we had in the past.
I think it's a wonderful result based on what my prior experience was.
We think so, too.
And the non-payroll costs that the custodial engineer, as you put it, needs, like for heating oil, for cleaning supplies, et cetera, that appears in the DOE OTPS budget?
Yes, the heating oil is a separate budget within the DOE. The custodians don't control that, but the things the custodians do control, like supplies, is also in the DOE budget.
So this is just the payroll for the custodial helpers?
Yes, sir.
That's it?
Correct.
And you went to this system because you felt there was more controls? Why did they go to this system, sir?
We felt that we could manage more efficiently and effectively across the entire system. Instead of individual employers, we now had one, so we can now move people between and among buildings much more effectively than we could in the past. But certainly the data transparency and the ability to have this information in one place is a huge benefit to the DOE and to the city.
I question the data transparency from your independent auditor. He had some difficult findings in the management letter, but that's a separate discussion. Some of it may be because you're new, I don't know. You're newly hired for this, sir, or you've been in the...
No, sir, I've been in this position for 9 years.
What?
9 years.
9 years. You're pleased with the new system?
Very much.
Sounds that way.
And you didn't give him a clean opinion, Warren, right? You qualified it a little bit?
Well, yes and no. We gave them a modified opinion on the government-wide statements because the pension costs weren't able to be reported under the GASB rules.
I see. So that was the problem.
So that was the problem, where on the fund financial statements, we gave them an unmodified or a clean opinion on those because the pension costs pension liability wouldn't have been recorded on those statements.
And these controllers, listen to the control, and these custodian helpers now became city employees, I guess.
No, sir, they're an employee of School Support Services, which is a not-for-profit organization, separate entity, not the city.
Jackie, what did you do for the audit when you got this? Tear your hair out, or?
We had to. No, the folks at School Support Services were very willing to work with us. And I believe we had several conversations regarding the year-end process in advance of issuing their financial statements. So they knew exactly what we needed. And we did do a GASB 14 classification test to determine whether or not they met the blended or discretely presented component unit class test, and that's how we reported them in the CAFR.
Go ahead.
If you turn to note 3,
page
17, the same question I asked before, to have uncollateralized bank. So what I've seen in disclosure is saying if you don't have it, you say you have it, and the bank's big enough not to worry about it. That's something you might want to think about in terms of that. The other thing is that you say that money market funds are valued based upon market and industry inputs. Money market funds trade at net asset value, am I right? So it wouldn't be the market, it's the NAV.
That's correct. That's kind of a boilerplate definition of level 1 fair value hierarchy, but yes, they are at net asset value, so we can clarify that language going forward.
And I got you with a T, Cavawar. You go find it.
I thought I had them all.
On the bottom 17, you say you have a lease. Where is the lease?
The location is on 44th Street, 321 West 44th Street.
Your neck of the woods.
Yeah. You also have a disclosure here in footnote D. It's unusual. The amounts do not purport to represent replacement value. Was there a reason why? Most of the time I haven't seen that sentence in when you're talking about depreciation. I'm not objecting to it. I'm just curious as to why it's in here and I haven't seen it in most other financial statements.
Yeah, no, we provided some assistance in drafting the financial statements, so that's a terminology we've used in other clients, and we thought it'd be helpful.
You can still be independent when you do that, right?
Yeah. They take full responsibility for the financial statements.
I guess these people have belonged to these locals before, these custodial helpers. Is that it, sir?
Yes, sir. There was no change in their union representation.
So that's why I guess they're not in the Board of Ed retirement system.
That's correct.
Oh, NICES.
What
Some
is
of them
the-
may even have vested interest in some of these plans. They've been around.
What's the status of the
Ma'am,
pension?
you were the manager on this assignment?
I'm the CFO of NICES.
Oh, you're the CFO of this?
Correct.
Of this.
What's the
my
status of
good
the
God.
pension, like insufficient information?
The status of the pension is it's in the
Yeah,
green.
as relating to the qualified opinion.
So
Get-
we've contacted the actuary that is actually doing the FASB or has done the FASB, and they'll also be presenting them in GASB as well in conjunction with it. Just the timing with this being completed and when they needed to be done, there wasn't sufficient time for them to redo the calculations in the GASB format.
So you don't believe that the qualification will be again in 17?
No.
And, just to explain that, the qualification a little bit more, and then try to describe it in the notes, there's one, the Local 94 folks are in a plan that reports on the FASB standards, but they're not, governments are not the predominant employer in that plan, so you're able to just have some disclosures. There's GASB 78 that lets you do that. But in the 32 BJ school worker plan, they were the dominant employer, so they weren't allowed that exception. That kind of got fleshed out after, a series of conversations, so there really wasn't time to get the actuary to go back and redo the GASB calculation, but they're going to have the actuary do the GASB calculation.
So they're using a separate actuary than the city's actuary?
Yes.
Now, the governance structure of this, do you have a board?
Yes, we do.
How many members?
5.
5? And is that in here?
Yeah.
Yes, I believe it's on.
No, that's all right.
I was going to ask a question until I got to the management letter about the audit committee.
Okay.
And my question was, did you have one? But then I thought I saw in the management letter you created one? Or am I incorrect?
So there is an audit committee. Everything, as discussed in the management letter, everything that was presented to the entirety of the board, not just specific to the committees as needed. So yes, there is one, but we, as mentioned in the management letter, there were no separate meetings, but we did present everything to the entirety of the board.
Is the audit committee made up of members of the board of your organization, or are they separate?
They're made up of members of the board.
And the members of the board are independent, that's the next question.
That's your legal question.
Yes.
I can answer that.
Yeah.
3 of the members of the
You
board-
must speak up, ma'am.
And could you introduce yourself?
Yes. Hi, everyone. I'm Erin Lester. I'm Special Assistant to Deputy Chancellor Rose at the Department of Education. The board is comprised of 5 members, 3 of which are independent of the city. The chairman of the board is Deputy Chancellor Elizabeth Rose, who is at the DOE. And one other member of the board is Nicholas Storelli Castro, who is the OMB representative.
And do they attend those meetings themselves, or do they send designees?
They are in attendance at all meetings themselves.
And do the independent members have qualifications pertinent to those types of responsibilities?
Can you be more specific?
Right, do they have the background necessary to serve in the functions?
Certainly.
Okay.
Yeah. The question I have is, do you have D&O insurance for them?
Yeah. Yes, we do.
Yeah.
That's a good thing.
I don't mean to, I was a little troubled by some of the comments in the management letter. You have 9,700 employees? That's what they said.
Correct.
9,700 and custodial helpers.
Correct, but we,
I'm sorry?
correct, that are within our roster.
I guess, who, you wrote the management letter, Warren?
Yes.
I guess the first comment, payroll data analytics, that's not normally done, is it?
It's kind of, the auditing procedures are kind of evolving.
No,
and
it's a
auditors
good,
using-
it's fine, but
using
for
analytics more and more.
ADP is what you use to print your payroll system?
Correct. Correct.
Yes.
I don't mean to be facetious, but some of these comments, it looks like there were phantoms on the payroll.
So if, I'll speak to that. In the actual findings that the auditors did, they went through the various payrolls and saw that there weren't any. So each of the bullet points, for example, for instance, where there were employees with the same name, addresses, social securities, and duplicate employee IDs, all instances that they found, there was only one active ID and the other one was inactive, meaning there was no transactions or data to that. The next bullet point, 20 instances where there are employees with the same name, same addresses, similar socials, that only included one difference in digit. So the reported that we provided to the auditors included iterations of social security numbers. So as you can imagine, with the 97 employees, there was instances where...
No, I could imagine there could be errors, but...
Correct. So the report included iteration, so it had the same employee ID. So for example, when we process payroll, every person, just like, we've got one social security number, there's one employee ID number for each person. So in these instances, there was one employee ID.
I never thought that there would be 9,700 custodial helpers, but I guess it's okay. I don't know.
Those are not all full-time. Many of those are part-time, and some of those are
Thank
at
you for
will.
the
Like when we have a
clarification.
snowstorm.
Thank you for the
We call
clarification.
people in. There's a big chunk of those types.
Some may be seasonal.
Yes, sir, absolutely. Yeah,
Okay.
we have summer vacation replacement
Okay.
people that come in. And if I may, sir, we mentioned earlier moving to the new system and the data transparency. This is one of the areas where we are very happy that we have this new system, because heretofore,
Well, you can identify
custodians were keeping this information by paper in their own buildings. We now have a centralized system to catch errors like this, where we never really did have a central system before. So we actually look at this as a good thing, and I firmly believe that some of the things that were identified, especially in that #1 comment, were transitional issues, where we were relying on both the custodians and the individual employees to give us that information themselves. Now that it's in the system and we have controls in place, we're not going to see that next year.
Mistakes will creep up the first time.
No, it's a good system.
Why are you using ADP as opposed to the Department of Ed's payroll system?
We're an independent operation from the DOE specifically.
Okay. But there are other organizations that still use cities' payroll systems.
I have no.
I'll have to get back to you with
Okay.
a clearer answer on that.
Maybe it's cheaper.
ADP might be cheaper.
No, ADP has been in business a long, long time, and
I
that's how
know
they
it well.
started. But
So before, Warren and before you guys conducted, I guess, did you put in this request to ADP for the first observation regarding the data analytics of employee files? You initiated that, Warren?
Yeah, we requested it from the client, and the client then obtained the information from ADP
Now,
first.
so, had you guys ever done that independently on your own? Have you ever looked at your payroll and looked to identify any inconsistencies or abnormalities as identified here in the management letter?
Yes, we did. And you want to take it further? We also utilize that we have a system called PETS within the DOE, so that all of the people that are currently working in the school are vetted. So we verify what's in PETS compared to what's on payroll. And we make sure the systems are all even.
Right, no, so you said PETS does this background check, that's what this letter says. But
Correct.
going back to all these inconsistencies of individuals with similar or different social security numbers, same addresses for 35 employees, had you ever done your own investigation or just routine examination of your own employee records or requested this information before from ADP on your own?
Yes, we have, and even taken it steps further within, consistencies of, people being within the correct unions, addresses, corrections, and things like that. So yes, we have.
So then I assume you corrected those issues as they came along?
Yes.
Reason why-
For instance, the first bullet point where there's 4 instances, in many of those instances, we're able to see that those profiles were inactive, that we made inactive ourselves, knowing that there was a duplicate within there.
Okay. So, I mean, just for example, with DOE's example from earlier with regards to their network access and other information, do you have perhaps a monthly process where you can go back and look to make sure that there aren't any irregularities and those can be addressed so that it's at least happening on a regular basis as opposed to, would that be a feasible thing to do or a reasonable thing to do?
I believe so.
Okay.
Heck, you want to get them off the day they leave.
No, I agree, but, pending, other actions by management, I think that, this could at least be an interim way of addressing that so that there aren't larger risks to your agency.
I had a question about the background checks that PETS does. There was a time when you worried about, this is going back when I was sitting looking at this stuff, you worried about the character of the custodial staff in dealing with the children. Is this PET system sufficient to turn up or satisfy yourself that you're not getting somebody there who's already a proven risk?
Yes, sir, absolutely. That's the PET system, which is Personnel Eligibility Tracking System, is the one that is used by the DOE. And as our partner in this labor agreement, they use our system. So anybody who is ever arrested for anything comes to us, gets flagged by us, and then we look and see if it's something that prevents their employability with the DOE. If it meets that criteria, we pass that along to school support services, and they take appropriate action. They make sure that anyone who gets flagged for something where they should not be working in a school, they are immediately blocked from working in the school.
Thank you.
This is a smaller issue, but so you're leasing your office space for your operations, correct? And it's here. It's on page 18 at almost $2.7 million. Is there a home for you in a DOE facility, given how it overlaps that maybe after 2022? I mean, is that something that's been thought about, or is it okay just
I think it's a broader question that we'd have to get legal advice on, considering they are an independent organization outside of DOE. We've taken great pains to make sure that there is a separation. I'm not sure how the lawyers would look at having them reside.
Another city office, a city space where we're not paying.
If it was a straight-up lease, I would think that would be appropriate,
DCAS,
but
maybe.
we would have to get counsel advice on that.
How many employees are there administratively, not the, with you, ma'am?
There are approximately
Pardon me?
About 28
28.
to 30, yes.
And where are you located?
On 321 West 44th Street.
3?
In 1 West 44th Street.
Okay.
My neighbor. I'm in Times Square.
Yes, we are.
It's true, if you get part-timers and they don't want to report it, they'll give you a different address or this. It depends who you're getting. All right.
Okay.
And how long have you been with this organization?
Since the end of May.
Since
The end of May,
the end? And
6 months.
prior to that, you were with another city agency or no?
No, I worked for a public facility maintenance company.
In the management letter on page 3, they talked about the lack of an accounting manual. Could you give us the status of that?
It has been completed and submitted to the auditors.
Thanks. Also, on page 5 of the management letter, number 8, it says lack of audit committee oversight, and then it says management's response N/A.
So it goes back to what I spoke to earlier, that all information was presented to the board of directors in all of the meetings.
Yeah, but this
the
means,
financials.
this makes it sound like it's not applicable.
Oh,
It's the wrong act.
Yeah, we'll adjust that.
Okay.
No.
I have a couple of nits, but I'll just give them to Warren.
Yeah.
I just have, if you had to do an estimate of the 9,700 people, how many are part-time, how many are full-time? Could you, if you're comfortable giving an estimate, or,
as far as the breakdown, I'll get back to you, but I can tell you that on a biweekly basis, we pay.
pardon me?
I can't give you the breakdown to that, but on a biweekly basis, we pay approximately 6,500 to 6,800 employees. On a biweekly basis, so every payroll on average, we pay about 6,500 employees.
Okay, not the 9,700, because some of the seasonal.
Correct.
Okay.
Correct.
Or part-time, I see. And even though that's 6,500, they may not be all full-time.
Correct.
Okay. All right.
I just had one question. So this was on the management letter, page 4, conflicts of interest policy disclosure statements. So COIB rules apply to you, correct? The conflicts of interest board?
Yes.
And so who makes the determination in your agency as to who is required to file a COIB filing with the city's conflict of interest board? Do you know that?
We don't. We'd have to get back to you on that also.
Okay. Do you, okay.
Bernie. But both give them scratches.
Are we all right then?
Let them find the capital T.
It's tough starting a new
I want you
business.
to go through the, find the capital T.
I get it.
We'll do the data analytics next year on the financials. Find out what the capital is.
It's all right, we give you the singulars and the plurals, too.
All right, if there's no other questions, then we'll thank you all for coming. Thank you for your comments.
Thank you.
Mine are marked in red. Sure. Is there a charge for the thing?
Sure.
Hey, put your finger in, I
Yeah,
don't get
but-
it.
I'll put a sticker in mine.
That custodial business
What?
used to be a horror show.
Oh, my God.
They had, the custodians were shooting galleries in the basement. They were selling heroin shots in the basement.
What? Maybe they'll control it. It's very hard.
And after certain of the schools, the guy had the right to have a Jeep with a snowplow. And after 3 years, I think 3 or 4 years,
He kept the
he
Jeep.
kept the whole thing. I used to go bonkers with that.
No.
Hello. How are you?
Good.
ECF.
You're ECF?
Yes,
You're the Educational Construction Fund?
correct, sir.
Okay.
I remember you.
Pardon me?
I remember you.
Yeah, I remember you too.
That would be you.
You can't forget him.
I can't forget him.
I'm sorry for that phone call, Bernie. It's my granddaughter. She's having twins. And she saw the doctor yesterday. She's going to give me an
She
update.
wanted to tell you that's what she was going to have?
No, I already know that. That's just
When does she do?
April, May.
All right, good morning, everybody. And
Good morning.
I'm sorry.
You're missing the rest of the committee, Bernie.
Oh, okay. I'm sorry. Let's take a break then.
He's getting water.
They're getting water. I'm going to get some more coffee.
Let's see if the doctor called.
Please, another 5.
Okay, take your time.
Yeah. 2:00 today, uh-oh. Come on, Tim. Thank you, sir.
It's a new cup. I got them confused.
Yeah, I wouldn't worry about it. Nuts. Myra, is she still feeling badly? All right, I have an appointment with Dr. Nash at 2:00. I'm in the middle of a meeting. I'll call you back. You know his address? I'll get it to you, and I'll meet you. I'll meet you there at 2:00. It's on East 72nd Street. I'll call you later. Who is? At 4:00? All right, well, by 4:00, we should be back in the...
I was going to say there were some HIPAA privacy concerns that probably we should be worried about.
Not everybody is back.
Are you guys?
Will you kindly introduce yourselves?
Yes, of course. Hi, I'm Jennifer Maldonado. I'm the Executive Director of the Educational Construction Fund, ECF. With me today is Cynthia Wong, ECF's Director of Finance, Andy Wilder, and Jim I always say this wrong. Filicanevo.
That's it.
Right, there you go. Filicanevo from Israeloff Tratner, ECF's independent auditors for fiscal year 2017.
You both are with the audit firm?
Correct. So, if you'd allow me to provide you a very brief overview of ECF's financial statements and an update on our development activities. So the fund's net position increased by approximately $12.9 million during fiscal year 17 after a $2.5 million increase in 16. The developer of ECF's 57th Street project, which I know you're very familiar with, initiated sales of the residential towers condominium units in March of this year. In connection with the sales and our renegotiation of the lease in 2015, ECF received a participation payment of $10 million from the developer, reported as additional rent. In 2017, the fund's rental income and tax equivalency revenues increased by approximately $2.2 million, including a $700,000 tax equivalency increase from the fund's Keith and Kelly Towers. That's one of our older development projects in the Bronx.
In prior fiscal year, the fund had extended the lease of that development with a new tenant for an additional 38 years and was able to preserve 613 units of affordable housing until the year 2090. ECF coordinated with its tenant to oversee some roof and maintenance work at our West 133rd Street project, formerly known as the Roberto Clemente project and now known as the Terrence Tolbert project. The statement of net position includes a $1.3 million payable and receivable for this project, which will be reimbursed by SCA, as this is a capital project for the school. In April in 2017, the fund signed a term sheet with the developer Alloy Development Company for a new project at the Khalil Gibran School at 362 Schermerhorn in Brooklyn, and is continuing to work through the approval process. We anticipate certification with the City Council on February 12th, and we hope to start construction on that project in 2019. The City Council approved the fund's project at Co-op Tech at 96th Street in Manhattan in August of last year, 2017. Unfortunately, that's been held up a bit because of ongoing conversation between the city and state on the use of the playground for the project, but we're hoping to have that resolved within 6 months. So the delay is just about 6 months for the project inception. On July 14th of 2017, ECF released an RFEI for the development of DOE's administrative offices at 131 Livingston, where we're hoping to construct a new school building in District 15. There's a very high demand seat need in that area, and we're hoping to leverage that office building to accommodate about 600 new school seats. We anticipate releasing another RFEI for a school site in Manhattan sometime this year. So those are sort of the big picture issues for us and things that we're working on. If you have particular questions, our auditors obviously can go through the financial statements. Our CFO can go through any particular things that you wanted to speak about.
I like the fact that they included the projects that have been completed in the statements. I think that's important, and it shows that a lot of work has been done. And,
yes.
You
I think that was at your behest that we include those
things. Yes, yes.
That's why he likes it.
Yes.
I'm sorry.
I said, that's why you like it. You asked for it.
You say that some of the projects with commercial buildings and some are rentals. So like Murray Bergstrom, that was commercial.
Correct.
And I guess, what is the high school? Norman Thomas
Norman
High
Thomas.
School? That was commercial,
Correct.
too.
Norman's 3 Park Avenue.
Big buildings.
Correct. Very, very big buildings.
Yeah.
Those were done in the
Verizon's
70s.
still at Murray Bergstrom? Or no?
Yes. Yes, it is.
It's a good tenant.
Yes, it is. It's a very good tenant.
Yeah.
It's been a very good tenant for us. But that was sold.
And the $10 million that you got, it's a one-time payment?
No, it's attached to sales of the condos at 57th Street.
Yeah.
So there will be additional payments as the condos are sold. I think right now they're at about 45 to 50% sold. So we anticipate additional sales this year and next year. So there will
So you'll be getting some more.
Correct. It won't be of this magnitude, but we should be receiving.
And that was,
that was renegotiated. There was,
deal.
it was a very good deal.
deal.
We were able
It's a high
to,
rent
we took
district.
advantage of a delay in the project to renegotiate when the developer was solvent to be able to finish the project, and we were able to negotiate a participation.
and you have no restrictions on those extra funds that it gives you? You can just put them into operations?
Yeah, we put them into operations. Quite honestly, we've forecasted for the next 4 projects as we look at the increased need for affordable housing in the projects as well. There will be some use of those reserves in order to supplement the affordable housing.
But that will those are all condos at 250 East 57th Street?
No, half of them are condos, and about 250 are condos, I believe, and 100 or about approximately 100 are rentals.
Uh-huh.
Our 96 project is all rental, and that has
You got some
70/30 affordable housing in that mix. Our our newest project at 362 Scaramouhorn will be rental and condos as well. And that also has affordable housing at 70%.
very creative. No.
Very
I mean, it's
challenging,
good.
very challenging.
May I, Bernie, now, please?
Go ahead, sir.
I'm looking at one thing that struck me. It's very Manhattan-centric. Oh, I'm sorry. I'm looking at the location. Most of the locations are Manhattan.
Correct.
And is there any attempt to spread this stuff around the boroughs?
You know, one of our biggest issues and how we're able to be successful is that we have to take advantage of the land values. And where the land values can support the schools are primarily in Manhattan and Brooklyn. I would love to be able to build in the Bronx, but that would probably come at some subsidized cost of the city to help support those projects. And ECF obviously is a self-sustaining organization and does not look to the city to subsidize its projects.
Well, now, the next question I have is the change in the tax law going to affect your operation going forward?
I think we've looked at that somewhat. I'm not sure if there is a substantial hit to us for the tax law changes or the anticipated tax law changes.
I think we're okay.
No, you have to answer into the microphone.
The one thing that we were looking at was you can't do advance refundings. We weren't anticipating doing that anyway. Did you guys see any other changes in the tax law?
Okay.
I think we're okay.
I will tell you that it's an amusing omission. You left the dollar signs off on page 19.
We have to have something for you to catch.
Well, I haven't-
mean, we come every year, and it's usually a semicolon
That's cute.
or
I'm not
an
fond of
exclamation
semicolons.
point, and so we
dollar
needed,
signs need
we
something.
had to have something.
And that's
So,
another question. You're showing the fair value of the bonds payable.
Correct.
That reflects the fact that the interest rate change has made the bonds more valuable, right?
correct.
But you will never pay that difference.
No.
So
No,
when you
they're-
look at
they're
this,
fixed.
what, you're saying carrying amount. So if you're looking at this, is the disclosure to a reader adequate to say that this is an artifact of the accounting rules and not going to cost us any money? And should that disclosure say, that? I know the accountants don't like that.
Yeah.
But
I would ask my auditors to answer that question.
We really have to follow,
no, I know you can do this, but the sentence that says that the only amount of money that will ever be out is the 237, not the 262.
I guess accountants or auditors really don't think outside the box because it could take us into very, strange places. I don't know if you've encountered this with any other auditing firm, but I don't think anybody's ever really done it like that.
Okay.
You can only, there must be a school involved in your building. Is that
Correct.
it?
Correct. We can only leverage DOE or a municipal building itself.
Yeah.
We can't go, we're very dissimilar from SCA, which can acquire properties. We
Yeah.
have to use the buildings that are available.
Okay.
So could you, you've, at perhaps Bernie's request on page 7, you've listed the projects that have been completed. Could you identify the projects that are in process?
So the projects that are in process are our newest projects, and those have not started in terms of construction. So we have a project at 362 Scaramouhorn Street, 80 Flatbush. And as I noted, we are in the certification process for that project. And we have one RFEI yet, so that's very, very early on, and we're not sure if we're going to be able to engage in that project, which is at 131 Livingston, and we'll issue another RFEI at the end of, at some point in this year for another location at 131 6th Avenue in Manhattan. So those are the in process, but they have not started construction. All of our other projects have finished construction and are viable working projects.
Sure. And in your, when you issue your RFEIs, I mean, I haven't looked at them, but, I mean, do you identify what your goal is, what your mix is? Like, say, for example, if it's affordable housing, or is it very project-specific as far as what becomes, what your, RFEI comes with?
It's project specific. We're here to build schools, so anything that's added to it through zoning changes that would trigger the affordable housing, we disclose that that would have to be something that's considered within the project. But it's not something that I would say that we would say we want affordable housing on this project. It's really dictated by the regulations that would be imposed if an upzoning were to occur or some other text change to the zoning amendments and that sort. But we're very clear with, we are looking at rehabilitating a current school building and adding seats to that school building or that particular site to meet seat need. So I think I'm answering your question. We try to characterize it that we have a property, we have a building, the building needs either demolition or rehabilitation in order to accommodate the school, the seats, the current school that's operating there, but we're also looking to leverage the air rights that are attached to that school to add seats to that, and the mix could be a mix of affordable and market rate. It could be only market rate if there's no upzoning needed. It could be commercial, it could be residential. There's a number of opportunities that we could work with the developer on. It really has to meet the financial plan in terms of being able to repay the bonds for the schools themselves.
Got it. And so when you make a determination whether your project will be or would be commercial or residential, whether it will be a condo or some other, I mean, is it predominantly condos when you have a?
It's not predominantly condos. It's predominantly rental. Condos are a little different animal, and we would have to seek state legislation to do condos. We did that on 57th Street,
Right.
but then we had to, those are case-by-case basis.
You sought an
So,
exemption.
Correct.
Okay. And so what goes into your determination? Is it based upon the general land use of that area, what makes sense, or is it based upon what the responses are from the RFEIs?
It's both, but if I have to prioritize them, it's the cost of the schools are X, and whatever financial model a developer brings to us has to be able to absorb that cost in addition to the ongoing rent for the time period that the lease is being sought for. So it's a financial model more than anything that really determines, and that we get the kind of schools that we're looking for.
Right, that's your primary obligation.
The schools is correct.
yeah.
The schools. So if we're looking to build 2 schools, and let's say that at a cost of $100 million to build 2 schools, we have to make sure that whatever financial model is brought to us from a developer is able to absorb that $100 million, as well as the ongoing rent for the actual ground lease for the project.
Right.
So it's sort of all of that.
I get it. I mean, and the cost for the developer, obviously, they have lower returns perhaps initially, but over time, after maybe 10 years or so, I'm sure they're doing quite profitably.
I think, to be candid, I think we both are.
Yeah.
You know, at the beginning, it's the rental payments go directly to pay off the bonds, so there's nothing really, ECF does not make anything per se in those first 40 years. It's to pay the bonds off after those 40 years, and then there's rent that continues to be derived from these projects. And so the developer could be doing quite well at that point, but ECF also now is not on the hook for lack of a better word, on the hook for the
Those
bond
obligations
payments.
are getting
Correct.
paid.
Correct. That sounds a better way. I got to remember how to say it that way.
You're not responsible for maintaining the residential buildings or this?
No, that's
No.
the developer. Correct.
The developer?
Correct.
Or if there's a superintendent?
Yeah, the developer is in
that's the-
control. They are our tenant in a way. They are responsible for we are the less.
everything.
Yeah, they are the lessee.
And like
That's the
you
way-
say, the rental payments have to cover the bonds?
Correct.
And you're not going to be able to do that? Okay.
Correct.
And the depreciation, all right.
Correct.
Tax benefit here someplace, too.
It's working for a nice few years.
It is. I think everyone. I think my colleagues at SAA will probably tell you this. That construction is very expensive in the city, though.
It's there.
The numbers are not always to our benefit. So.
It's good. If there are no more questions, I thank you again.
Thank you very much.
Nice set of
This is-
statements, gentlemen.
Thank you so much.
We have now the School Construction Authority. Nice to see you again, ma'am.
That's the management letter, and here's the document.
This is terrible. Terrible. It's terrible.
He's talking
They're
about just
fine.
The custodians,
What?
the custodians always used to get like a 1099, like they were independent contractors.
They made a lot of money on this side.
And a lot of people felt like what Mark just said, how do you manage it better? Because they had their own books and everything.
I don't know.
I think it was every year they got a new truck.
Well, after so many years, they took the truck home. The Jeep with the snowplow.
How are you, Ms. Agri?
Very well. Good morning. Is this on?
You want to introduce yourself and your colleague?
Yes, I will. So, my name is Marianne Agri. I am the Vice President of, oh, it's not on, Finance and Information Technology at the New York City School Construction Authority. With me today is Ewen Wang. She is our Director of Accounting and our auditor for Mark Spanath, who I think you've seen already today, Warren Rupel. And I think you might know him anyhow. Okay. So just a quick overview of 2017. So 2017 was the third year of our sixth five-year plan, which spans from 2015 to 2019. Our current appropriation is $15.2 billion.
For the whole 5 years?
Yes, and there's actually a proposed amendment for it to go up to 16.4 billion. So in 2017, our total commitments were 3.1 billion, and that included awards for capacity projects. Those are our new schools that add seats to the system of $933 million, and that was included awards for 26 new schools. We also awarded capital improvement projects worth $1 billion, and it was 328 projects. In 2017, we completed 25 new schools. That included 11 pre-K. And that created 8,390 new seats. Currently, we have 35 capacity projects in construction, and we have 449 capital improvement projects in construction. For 2018, we are on track to open 13 new schools and add 4,400 seats to the school system. So that just gives you an overview, and from there, I will open it up to your questions.
All your funding is capital funds, right?
Yes.
All salaries, everything is
Yes.
capital. You're a capital-intensive agency.
Yes, we are. That's all we do.
I ask you that every year, we just to keep it straight. So, when you build a new school, you have a contractor, right?
Right.
You don't use Board of Ed employees to build it?
No,
Department of Ed.
no, we bid all of our construction out.
And then you have construction managers who work for you, I guess?
So we have
Oh,
project
whatever.
management staff that basically will, for most of our projects, we have our own project managers. We have a construction management department that oversees the construction. We do use construction managers on certain types of programmatic projects.
All right, if I can.
How is the change orders going? I always say.
I know, about the same. I think I say the same thing. We usually budget about 10%, and then we pretty much come in within that 10%. Some are over, some are under, but that's sort of our number.
Do you have a benchmark for cost per seat?
Not so much for cost per seat, no. The more the measure becomes cost per square foot.
How does that compare to other places? Is New York?
Well, New York, I think in general is higher, and that's because of our labor laws.
Okay. I had a couple of minor questions. One of which is in the use of estimates, and you talk about accrued expenses, pensions, pollution. You don't mention OPEB, and that's one of the biggest, isn't it? That's a footnote on page 17.
Page 17, Mark?
Yeah. Why did you leave that one out?
I don't know. They have it on page 32, they talk about OPEB.
I know, but here it's a use of estimates, and they don't mention OPEB.
Yeah, well, we should put
They
OPEB in
probably
there.
should do that, all
Yep.
right. Then, I confess, Warren, what's the half-year convention? I just didn't, that's my ignorance, I don't know what it is.
Half-year convention is, you're looking on the depreciation?
Yeah,
Where are
it's
you looking?
fixed assets, and it says that during
So
depreciation, what's the half?
I've got to try to, assets that are put in service for the first 6 months are depreciated, or not depreciated, and assets that are put in service for the last 6 months are depreciated for the full year.
Oh, all right.
I believe
Well,
that's it.
That's the first time I'd ever seen it, it shows.
As long as we're at page, the footnotes on page 16, the superstorm Sandy, that's an even 170, 671, or that's in thousands, that number?
They're in thousands.
It says in
So it's like
thousands at the top of the
170
page.
million, actually.
Yeah.
Yeah.
It says at the top of the page, I confused
But
me.
FEMA reimbursed a good part of it, I guess.
Yes, they pretty much are reimbursing 90% of our expenditures.
Okay, if I can go on, then, you have a lot of securities held in lieu of retainage. Who watches the margin on those securities?
We do within the finance department.
You're talking for the retainage?
Yeah, how do you know when you get a security, it goes up
Yeah,
and
no,
down?
no, I think that's what you were talking.
Yeah. Is Bolton Partners the new actuary for the city, or you got,
I'm sorry, I didn't hear you.
it's on page 25. It's a reference to Gabriel Roeder, that I remember from the city. Is Bolton Partners the new actuary for the city?
Sherry Tran's the actuary.
Well,
You're talking about the actuarial.
No,
audit.
The audit.
He's just.
There's a disclosure here that
disclosing-
says Bolton Partners cover, et cetera.
He's just disclosing, I think, Mark, what the actuary's assumptions are, which can affect their contributions.
I'm not even asking that simple question. There's one reference to Gabriel Roeder. I remember their name. Then it says Bolton Partners is reviewing it. Are they the new actuaries for the city?
No, they would be, because actuarial consultants, they had been. Every few years, we have to have an
Right.
actuarial audit, and they were at one time. I think you have a different company now, right, Jackie?
Yes, you're correct. GRS was the actuarial auditors at that
Let me
time.
ask it again. Where does Bolton Partners come in? Are they the
Bolton
city?
is, I believe they're the current, I believe they won the recent request for proposal that went out.
They're
I
the
wanna
new
say
ones.
They're the new ones.
2016? Yes.
That's all I'm asking.
Okay.
That's all. I'm just curious. Now, I have another one. If you go over to page 26, real returns, arithmetic basis and all that wonderful stuff, how can the long-term expected real rate of return go to 5.21? If you,
No.
there's no individual rate of return approximates that.
No.
Are you adding up all those numbers to get to that rate of return? I mean, that wouldn't make sense.
No.
So where does that 5.21 come in?
Again, they're taking data from the actuary's office and just reflecting it here.
I know, Bernie, this is simple arithmetic.
No, it
Yeah,
won't add up,
It
Mark.
doesn't add up.
It can't. It can't because it's not just arithmetic. It isn't, trust me.
No, what I'm trying to figure out is,
You shouldn't.
I'm looking, it says long-term expected real rate of return. I understand that. How does a real rate of return, long-term, get to be 5.21, when no rate of return that's added up to it is
Yeah.
equal to that?
Ask the actuary. I'm sorry, I don't mean to insult
That's all right,
you.
I can insult all you like. I don't understand
They're
it.
showing that, I think they're trying to show the components. If you take like on public equities, the 30%,
Right,
30% of the 5.7, I believe is the 1.7. So they're kind of allocating the real rate of return over the
Then how does the
allocation of the
aggregate,
portfolio.
I understood the individual components. What I don't understand is if your long-term rate of return at the height is 1.71%, when you add it all up, do you get 5.21%?
Because the 1.7% only reflects, that's the rate of,
that particular-
that's the rate of return as if for that 30%
For
of
that
the
class of
portfolio.
assets.
Okay.
Looked at for the whole portfolio. So it's only the rate of return that relates to that 30%.
Then how do I, all right.
You know,
If I can't convince
with
anybody,
due
I quit.
respects, it almost would suggest not to include this data in the audit, but just to kind of talk in general of the discount rate and talk in general about the wage component. And then if you want to mention the sensitivity analysis, because this comes from the actuary, and what can you do? This is it.
Well, I mean, the actuary, the
No, it's
information
part of the
they get from
city,
the
of
actuary
course.
is really designed to meet the disclosure requirements of the GASB standards, so,
All right.
I mean, you can't just eliminate
Is there an
things.
explanation that makes
I
sense?
wouldn't include it.
I won't pursue it anymore.
It's trying to share, it's trying to report the share.
I'm sorry?
It's reporting the share of the return.
Yeah,
If the total return's 5.1, 1.7 is coming from that group.
Microphone.
Listen,
you don't need
I'll get my education later, not at everybody's time.
You don't need it. You're members of the Board of Ed retirement system, your employees. Do you have any NICES members at all?
We do.
You
It just
do have-
depended on where people came from when they joined the
They
SCA.
transferred in and they stay in the system.
Correct.
And you also offer them a deferred comp plan of 457
Yes.
rather than a 403B.
I think we do both, actually. We have both.
You have both, though. You treat your employees very fairly, then, I must say.
We try.
How many employees do you have, Ms. Agri?
So we have 818 right now.
A lot of building of schools.
Yes.
Most of the new schools are replacing old schools because there's a limit to how much land is available.
No, they're not no. We do demographic studies every year to identify where we have new seat need. And so a lot of them are to satisfy new seat needs, more so than replacing old schools.
Okay. And when the school is completed, you transfer it to the Board of Ed.
Yes.
And then, in addition to new schools, I guess there is
Capital improvement.
remediation of older schools.
Right.
It works.
We think so.
I think it does. They changed it many years ago for that reason. They weren't pleased with the Bureau of School Buildings with their performance. All right. I've been around a long time, so I remember. Do we have any more questions for these good people? If not, thank you again, Ms. Segre. Oh, there's another question? Go ahead, John.
On page 7.
Page 7?
Page 7. Top half of the page, the table doesn't have years on it.
Right. Yes, thank you. We noticed that as well. Appreciate it.
I wasn't going to give it to him, but here it is missing.
Since these guys didn't pick that one up, I thought.
Right, right.
Sorry, I was going to give it to him.
Warren, I had one question with regards to the management letter.
Yep. Oh, yes, the management letter.
What, are you any additional concerns regarding the implementations of the issues that you've raised here? Or are they all being implemented in a?
Yeah, I think, I'll just, okay.
I mean, you have updates and whatnot, but.
Yeah, I mean, the retainage, long-term retainage payable, they've made progress on that and have actually made some adjustments. The construction in progress, aging, as I call it, that's still underway, and I think they have some initial data, and they're analyzing that to see if there's any adjustment needed.
The Audit Advisory Committee, are they independent?
Yes, they are.
Okay. Fun to look at the expense accounts.
If there are no other questions, thank you, Ms. Segre. I'm sorry you had to wait so long. We had some.
No worries. Thank you very much.
Okay, very good job. Thank you, Warren. We go into executive session. Oh, yes, yes. We have a special presentation.
I know what.
No management letter comments.
There actually are some comments we'd like to share with the committee, and
Which you'll share.
yes, and they would be contained in a document that kind of
Okay.
looks like this, if you're kind of paginating through. So
I do have hard copies if anyone needs an extra.
I'm sorry, ma'am?
I do have hard copies of the slide deck if anyone needs extra copies.
Are they colored?
Yes, they are color. Spiral bound.
They're pretty.
This is fine.
So this is the control room. I just want to confirm this is still public session, correct?
Yes, it is.
Thank you.
Yes. You're outdated because you have pencils in here. Yeah, with erasers.
Plastic pocket one.
Yeah, well, it's one step up from a calculator, I suppose. But we got to work on these graphics a bit.
It's not an abacus.
I never learned how, I have one, I don't know how to use it.
An abacus?
Yeah.
I understand it's quite accurate, but there is a method to it.
I've seen
apparently.
it, they do it very fast.
So we did want to bring some things to your attention, and Marla and Hassan will kind of walk you through some of those details. Clearly, we're open to any questions you may have, and then I guess we can proceed to executive session from there.
All right. No chicken stories. All right. So starting on page 3 of the materials that are in front of you, what we've outlined for you are the definitions of the various levels of internal control matters, material weakness, significant deficiency, control deficiency. You've heard these words before. I'm sure that you've read through the materials, so I'm not going to spend a lot of time on this slide, other than to share with you that we did not identify any material weaknesses or significant deficiencies that have been put in writing, and that is why you don't have a letter in front of you. We haven't identified any comments that were of a severity that needed to be put in writing. What we have identified are some opportunities for the city's management to continue some of the processes that are already in place, to continue to improve some of the some of the disclosures, some of the amounts that are recorded in the CAFR. So again, these are not control deficiencies, these are opportunities to make the financial statements even more representative. Nothing in here is material. Again, nothing that's a control deficiency. So on slide 4, we've outlined 4 of the items here which relate to the financial reporting processes. And keep in mind, this relates to the CAFR as a whole. The first 2 relate to primarily to grants, and so these are receivables, which would be amounts that are due after they've been spent, and also unearned revenue, which would be amounts received prior to the expenditures. And so depending on the agency that the award is coming from, depending on the timing of the expenditure, at any point in time, the city's going to have both of these. And it's coming from all of the city agencies as well. So there is a process in place to make sure that these amounts are tracked and are released from the statement of net position and pushed over to the statement of activities on a timely basis. The suggestion here is just for the city to continue to place emphasis on that. It's not something that any one agency can do by themselves, so this takes a tremendous amount of communication between the Bureau of Accountancy and the various agencies that are receiving the grants. So just keeping those lines of communication open and making sure that that we understand what those amounts are and what the timetable is for their collection in the extent of receivables.
Yeah, the one thing I would add to that is that grants by their nature oftentimes go over a number of years, and so it would not be unusual for something to be outstanding 3 years, maybe even 5 years, or perhaps even longer than that. So, you know, the recommendation here is just to kind of keep the finger on the pulse to make sure that, you know, depending on the relative nature of the grant and/or the funding agency, what is an appropriate amount of time before it's disposed of, meaning that, you know, you're either going to have to write it off or push harder to get the funds in.
There is a schedule presented within the CAFR that is essentially an aging of some of the grant receivables, and for 2017, that schedule goes back 10 years. And so that means that the city has spent money on projects that will be federally or state funded, and you've advanced them 10 years. And so, again, the older items are not huge dollar amounts, but again, from a cash flow perspective,
It adds up.
it adds up. So it's
Yeah.
just something that you want to keep your pulse on. Okay? The third one just relates to the Bureau of Accountancy and how the component units are monitored. As you see in your presentations, the Bureau of Accountancy does receive copies of the management letters and certainly the audited financial statements for each of those component units. We would recommend that the Bureau of Accountancy also obtain copies of the single audit reports for those component units for which a single audit would be required. Some agencies are included in the citywide single audit, some of them are not. So there's always the potential of findings in those single audits, and so it would be a good practice for the city to be aware of what those findings are. Not that you'd be responsible necessarily for helping them implement remediation for those findings, but just making sure there's nothing significant enough in there that it might impact the city's reputation.
Do you think it would be wise for the city to have the audit firm on those component units in a private session with the city, the way we do with you, with a view to monitoring what's going on?
I think it probably depends on which of the component units you're talking about and whether or not they have findings and whether or not they have their own audit committees.
Right, and I think as a starting point, we're saying, let's get these reports in and have someone take a look at them to begin sort of that risk assessment, if you will. And if there are comments in there that may rise to a level of importance, not necessarily from a financial standpoint, but perhaps even from a reputational standpoint, that those be understood and then maybe the process from there could be, as you suggested, Mark, to have those auditors come in and/or the agency representatives come in to further explain actions. That make sense?
I mean, obviously, the city is very complex, but how would, I mean, to Mark's point, like, what would be ways of effectuating this? I mean, it probably isn't one cookie-cutter way of doing it, but do you have any ideas as to how this could be?
Well, the first step would be getting copies of the reports.
Right.
And the component units are currently required to submit copies of their financial statements under a controller's directive. And I believe Jackie can speak better to this, but I believe it's being revised.
Yes, so after we had discussions with the auditors with respect to the single audit reports, we have begun the process of updating our Directive 22, which actually lays out all of the financial reporting requirements for all the component units and those that are included as part of the primary government and part of our fiduciary activity section of the financials. Directive will be updated and issued before March 31st. And this will be submitted and, delivered to all the component units as well as included in their year-end annual letter that we send to them of all the requirements and due dates. And we will be giving them deadlines of when we expect to receive those reports. And when we do, we will ask them to also include them as part of their package when they send us the management letters and their financial statements so that you will see them as they are presented before the community.
The single audits tend to have a different deadline than the financial statements, so it is possible that those single audits wouldn't come in on the same day.
Right.
So there might be a disconnect in the timing of when they would come to this committee, but they would certainly be required before the end of March.
But you would get them before that, right? But you would get them before the controller's office. Right. Right. Perfect.
And the last bullet on the line relates really just to the fact that there is some complexity to the different types of federal awards that come to the city. Some of them are cost reimbursement, some of them are advances, some of them are fee-for-service contract. There's a number of different contracting methods that the various federal agencies can use. And depending on what those vehicles are that are used, it can, on occasion, drive which numbers end up on the schedule of expenditures of federal awards, and thus may or may not be included in the single audit. So OMB does work tremendously closely with all of the different city agencies to make sure that amounts are coded properly. Just, again, something that we've got to keep a thumb on and make sure that we're paying attention to.
Cosmo, in terms of the single audit, you're satisfied with what the city is doing? It's the component units that you think need help?
Well, I'm not sure that they need help. What we're suggesting here is that, as a committee and/or as management of the city as a whole, that there ought to be at least an inventory and an awareness level of what others are that don't report to this committee are up to, or if there are issues that those are identified and then, assessed for any further action. To your specific question, Bernie, we are wrapping up the city's single audit. We will be in a position to present the single audit to this committee next month, so at the end of February.
At the February meeting?
Yes.
Thank you.
On the next page of the materials we've outlined for you, again, these are continuous improvement opportunities. These are best practices that have been identified by the IT portion of our audit team. All of these items, it looks like there's a number of bullets here, but really these are best practices from a controls perspective. There are absolutely compensating controls in place. And so just to jump ahead to slide 6, what you'll see is the deficiencies that had been reported to this committee last year, control deficiencies with respect to the IT system as well as the financial statement preparation, have pretty well been remediated. And so So again, best practices from an IT perspective. I'll turn it over to Hassan and let him give you some high-level details on those.
Embarrassing, but what is BIST, B-I-S-T?
That's the Controller's Office Bureau of Information Systems and Technology. So it's our in-house Controller's Office only technology bureau for technology needs just for the Controller's Office.
Thank you, Jackie. And I'll go through these briefly. Please stop me for any clarification. A few bullet points, all best practices, as Marla indicated. The first one really just states that we have adequate policies in place. They are being reviewed and updated. We just didn't see within the policy document itself when they were last reviewed, who they were reviewed by, and the last update date. Best practices will indicate that we should update our policies every 24 months, specifically when it comes to technology, because it's ever evolving, ever changing. The second bullet point talks about personnel with administrative privileges. So this indicates that we have the right people conducting all the right responsibilities within these applications. Management or leadership, IT leadership, should be reviewing the activity for the personnel that report up to them, just to make sure that they're only doing things that they should be doing. The third bullet point, very specific, just one parameter. When we think about passwords, accounts are not being locked out if you were to walk away from your computer. So, I walk away to grab a cup of coffee, my laptop is still open, my computer is still open, so let's just modify that parameter moving forward. Just to be specific, for FISA, it was city time, the application, and for Do It, it's the network. The fourth bullet point, we have manual processes in place to identify and review security events. We don't have a formalized tool or an application in place that would make our lives easier. Of course, there's a cost associated with it, so we wanted to point this out, that it would just make management's life easier, I guess, for lack of a better word, but we already have manual processes in place.
Have you been in touch with the cities? The mayor created the czar for information technology and data security. I think it's Mr. Gamino's office. Have you guys been in touch with them?
Not yet, but we anticipate doing so very shortly. And consider the outcome of that meeting and our approach for the fiscal 2018 audit, if appropriate.
I mean, because the mayor did issue an executive order last year on a lot of on some of these issues. They overlap with these, actually. So it might be worth having that conversation as to what guidance they might have and what they're going to, I think, planning on doing with Do It and working with city agencies across the board.
Sounds great. Thank you, Mayor. And we will, before we plan, and as we plan for the fiscal 18 audit, just a further comment. The one person that we did connect with is Sadia Ismat, who's the cybersecurity specific individual at the Department of Finance. So we have had some conversations, but to Cosmo's point, we will further the conversation. We are now at the fifth bullet point, penetration testing. This is specific to the network. Once again, there's a cost play. You hire an outside consultant to come in and basically look at your firewalls and make sure that all ports are, without getting technical, that we have all the necessary controls in place and identify opportunities and improve weaknesses. Just a recommendation. Third to last bullet point. We're speaking of security administration, accounts, access, and privileges, not so much personnel, but service accounts. And basically what that entails is we have a slew of applications and tools that help support our IT infrastructure. All these tools come with a service account. This is just to make sure that leadership is looking at these accounts and we are either revoking access to tools that are no longer in play and just ensuring that only right people have access to these privileged accounts. Second to last bullet point, Do It has a very robust and comprehensive disaster recovery plan. All we are suggesting here is that the Department of Finance indicate personnel within the department that would be responsible coordinating with Do It if in the event that we had to manually start operating our procedures. And the last bullet point, BISD, once again, the Office of Controller, we should just have passwords that are complex, uppercase, lowercase, $, all that fun stuff.
At least 10 characters.
You know, it's that old
change it
adage,
every so
it gets so complicated, you need to write it down and post, put a yellow sticker and put it on your computer.
Don't put it in your wallet.
If no
Any-
questions, I'll.
Sign at a time.
Any questions that we can answer for you?
The status of the prior
Yes.
comments, I know the grants management system, they've done the capital.
They've done the capital.
And, John, are they working on the expense budget, or they can't?
Well, some portions of, for example, all the Sandy grants are in a grant. All the Sandy grants are in a grant management system. And that applies to both.
It's a lot.
Capital and expense. But that was a grants management system designed solely for those grants, resulting from the funding streams that came with that disaster. Maybe I should speak into the mic. Thanks for not interrupting me and say, Mike. So it's something that we're still looking at for the entire expense budget.
Doing capital, I think, kind of helped to get to the,
It was a start.
it was a good start.
It was a
Okay.
start, but if you think of all the grants for the entire city, it's a big job, and,
Yeah.
you know, we don't have a global answer to
It's
it.
a comment that's been around for many
Yes.
years.
Indeed it has, yes, and I think we
guess my
resolved
only
the vast
comment
majority
would
of
be-
it, Bernie. In last year, we addressed and resolved a good majority of it. And as John pointed out, there are some elements of the operating elements of grants that are being covered. But, you know, the broader picture is, you know, is large by volume, and it's going to be complicated and likely very expensive, so we get that. But yet the question looms, you know, the city doesn't have a grant management system for a number of its grants. And so, you know, we continue to bring it to your attention.
Sure,
and
sure. No,
continue
they've
to
tried it
discuss
for years.
Yeah.
All right, thank you. I don't, my overall feeling is it's not the end of the world in any of this. I mean, we've done
Absolutely.
very well, and considering the size of the city and the dollars involved, I think it's pretty minor. Okay, if there's no other, I think there's no other matters, then we'll entertain a motion to adjourn.
No, we go into
Executive
executive
session.
session
Yeah, we'll go into executive session.
with the auditors.
Thank you all for your patience and everything. Thank you, sir.
This is saying is 30% application, 100%. They're earning 1.71% on that. This investment is earning 0.79.
I don't know if we need it.
Doesn't make any sense then.
Well, the auditors does have some
They want to share with us. Okay. I didn't realize that that's why they was there. I'm sorry.
Percentage of that.
So just do,
Motion
so
passed.
Jackie, just do the private members, not even the public members? Yeah, yeah, okay.
But of the 5.7.
Yeah,
I'll second that.
okay, okay.
I understand it. What's the meaning of this then?
This
Is that telling you what this means?
Let's do it one more time.
I have no more time,
Recording right now.
but I'd love to push.
Motion to adjourn?
Okay, motion to adjourn.
Second.
Okay.
I can't buy you lunch.